Hi everyone, here we go again. It's Wednesday, massive day today. We got Tesla, Microsoft, and Meta all reporting earnings. Three of the big seven all reporting earnings tonight after the US close. That's 9 o'clock Universal Standard Time. That's really the big news of the day. Obviously, we've got the Fed, which could be a bit of a non-event. Be interesting to see if Jay Powell gets pulled by any questions or gets caught off guard by some questions by journalists about whether he's going to stay on, whether he's not going to stay on after the May. He's a man of principle, I think, and although he was appointed by Trump, Trump's been very disparaging about him. But he has avoided, as David Rubenstein was saying this morning on Bloomberg TV. He has avoided recession in the US. Many were talking about recession. We got inflation that rallied. They've pulled it back down. And lots of criticism. Obviously, they're behind the curve and they need to move a bit more aggressively. Trump parachuted in Stephen Myron, one of his members of his government, and he's looking for a 150 basis point cut from here. Doesn't look like anything's going to happen. Certainly not today, or even before Powell resigns, gives up the chairmanship in May. There may be a follow through after today's announcement where Trump takes the opportunity to actually sort of steer the market to who is going to fill the role of chair from May. Obviously, many were expecting that first week of January. He played with it before Christmas. Obviously, things in Venezuela took precedent. Then we had all the farce over Greenland. His big pat on the back speech in Davos last week, and the speech yesterday, and obviously all the political pressure he's under with regard the brutal killing of those two U.S. citizens by the ICE agents. So ramp on. Mr. Trump, Mr. Donald J. Trump, President of the United States, had that big speech yesterday in Iowa where he was trying to get a lot of backing from the farmers, a very conservative or backing Republican state, Iowa. Big believers in the initial Trump term. A bit of flack in the audience, not as much as you might. More than I was expecting in his speech yesterday, but all sorts of things going off again yesterday. The announcement that the Fifth Fleet, the U.S. naval fleet based in Bahrain in the Gulf, is in position as the chief of staff called it yesterday, as Trump called it yesterday. So pressure ramping up back on the regime in Iran, and all sorts going on, all sorts of things moving markets. We've got record highs in the gold market. We've got the S&P futures over 7,000 for the first time. That sort of divert. What's all that about then? Gold's at a record high. Stocks are at a record high. The dollar's crashing. As we see here, this chart next to me is the dollar CAD. We've got the Canadian rate announcement in a minute, which would normally be like the event of the day. Big red high impact event, but nothing's coming out of Canada with regard to rate cuts or rate increase or changes in the rate or the outlook. Interesting to see what the statement looks like, of course, in a minute. But the weaker dollar, and again, Trump yesterday was very blasé about the weakening dollar, and that took the euro to over 120, not highs not seen since 2021. So absolutely all sorts going on. In the yield market, the 10-year yield this morning is 425. It's highest it's been for a while. A bit of relief in the auction in Japan this morning as well in Tokyo. The long-term yield, 30-year JGBs, the Japanese government bonds, were taken up quite well. That was seen as a bit of a relief. That could have been a bit of a catalyst in the Asian markets. It wasn't. Yen still holding up. The down a bit today, but anyway, let's get on with it. Oh, guys, whatever you're trading, whatever strategy, whatever asset you're trading, there's action everywhere at the moment. We're not shy of volatility. I've just got a different chart set up today than normal. I'm just using the MACD and the parabolic SAR. The parabolic SAR are these blue crosses here on the chart above here. We can see those blue crosses. And the MACD standard setting 12, 26, and 9. We got the signal line and the MACD line, the orange and the blue lines here, and we also got the histogram. Positive green when we're rising, and the acting signal line are rising, so we're in like confluence, and we got a flattening out with price action going up here. We've had a big turnover. We were still moving down. We turned negative here on the 23rd here on the histogram. The signal line, the K down, the signal line and the MACD line had already crossed the day before. So we went through 137.25. I think this line's been on here for ages. So that was added. If you hadn't got in here as this had flipped, you'd have got in here. But that's definitely using this strategy. We're looking for a cross of these the K and the D. Stochastics, the signal line and the MACD line. Then we want a flip of the parabolic saw. So that was actually in union. So and against a trend following strategy. So this triggered long there. Again, a very simple two-step approach. Simple works, friends. Don't get me overcomplicate it. Simple strategy there. Right at the beginning of the year, we've had a strong 3-week. Remember, we had that 3-week rally for the dollar. Connection problems. Hello, are we still there? Let me just make myself a little bit smaller. Might help things. Shouldn't do. I don't know what's going on. And up we go. So let's have a look. Bring us down to 5 minutes. See if we've had any reaction to the data that's just come out. So continuing to decline. So again, it was up there, it was down there. So this has been short. Actually did. It's not often they actually trigger together, but that day there. So you would have this strategy here would have been short, or is short currently from there this morning at not this morning, but at 13.50 was the last short. There's the short stop loss above the turn. Could have been here, could have where they put. It's a bit, and off we go. We're moving down through 35.35. 35.50, I should say, and continuing to move. So this strategy remains until either the parabolic saw flips from above to below the price action, or we get a touch or a cross in the lines. But as you can see here, the MACD and the signal line are both moving down in correspondence with the price action, and the parabolic saw remains quite a distance away from the price action. So currently, my stop loss would be around about here, 2 ticks behind. So I've locked in. That's my entry here. I've locked in at least whatever that is, 135.58, 135.53. So 5 pips here on the 5 minute ahead of the big news announcement. So you can see, although it's a significant red impact event, the fact that the market is priced in, no change and no real change in policy, or from the statement from the Bank of Canada, we've continued the weakness. The higher trend weakness we've seen in the dollar all of certainly this week, and that 3-week and beginning of last week, that 3-week rally coming to an end. So here, even down at this 5 minutes scalping strategy with the higher time frame trend. So we're still long. 35.50 is a key round number. It's also a key support area from left in the chart. Looks at the 5 minute. You can see the 5 minute one. Yesterday was a bit lower, a bit higher there at 35.62, but we got the higher time frames. You see, it's a key support area. We'll come back to that in a minute. Let me just bring up the calendar and see what the renouncement has been. We'll come back to the Aussie inflation. So we've remained with our rate as 2.25%. Nothing changed there. Let me have a quick scan of my feeds for what the Bank of Canada may be saying. Let me find one of my news feeds down here. No, Bank of Canada rate decision, no change to the overnight rate as expected. Outlook for the global and Canadian economy is little change versus the October forecast. Nothing new there. The bank expects inflation to stay close to 2%. Target over the projection period. They love that phrase, don't they? The projection period. It's anything from like 6 months, 18 months, and 24 months further out. Current policy rate at about the right level, and the new one says governing council judges the currency policy remains appropriate. So we've gone from about the right level to appropriate. So again, nothing changed there. The statement repeats: if the outcome changes, we are prepared to respond. They all say that, don't they? They have yet to do that. Economic growth is projected to be modest in the near term as population growth slows. Interesting, and Canada adjusts to US protectionism. Oh, that's quite a pointed direction. They're talking about the inflation. The CPI data. We saw about that last week, didn't we? A bit hotter as we've seen in other parts of the world. Unemployment rate jumped back to 6.8% in December. We saw that on Friday at non-farm payroll. So the Canadian dollar continues to move high, and we see this here. So there's and so we're very much in line there. So there's the data come out at this point here. We went back. Interesting. See how the wick went back to that key 13, 135.50. So we're in here. Stop loss now will be down to here now. And we're just bagging in, sort of banking some more pips in here. So we've gone, so we've got another 8 pips in the bag. So 35.58, 35.50. We've got 8 pips here, and we're continue to scroll that down. You see the move down has been exaggerated. You can see how the histogram's getting deeper because we're getting a divergence between the MACD and the signal line, and down we go. So where we stop? Well, let's just go up a time frame or two and see where there's a particular resistance area or a support area. And see here the 15-minute there isn't. We're still going into white space. The hourly chart, these are new. If we zoom in, we can see these are very significant moves lower. The daily chart even there we are, daily chart. Well, we had a bit of support on an end of day basis at 1335. That's 3135.50. But the intraday low is where we've got to now. So we may be looking. This might be a stretch enough for today. So get out as we've touched this level there. Can you see what I'm talking about? This level. This took us all the way back to June the 16th. June the 16th last year is where the dollar loonie is trading at the moment. So some profits might be getting bagged on that trade. Obviously, on a 5-minute time, we could go a lot. We could go, move significantly below it. But just bear that in mind that that's where we are at the moment. It's 35 area. Okay. Somebody's just asked, can I show that again? Certainly, I can do that. Let me just show you that again. So we go up to the daily time frame, and we look left, and we scroll right, and we have to go all the way back to June. We saw that as an end of day time frame, so it went to where we are now, 135.40. So you might want to take some of that risk off, as it's a day, and it's a weak bottom there in the wick, buying down at 135.40. But this move lower, I would argue that things have changed since last summer, and we're much more dollar weakness move, so we could be pushing to new lows. So again, if we go up yet again all the way to the weekly chart, remember we're just here on a 5-minute chart is what we're trading this. So on a weekly chart, the week when we were the weekly cluster when we were back down at these levels takes us all the way back to the end of September 2024, and during that 6-week period there, towards the end of the summer, beginning of and during September of 2024, the loonie dollar went to 134.20, 134.185. You can see that there on the weekly. So that cannot be ruled out on these higher time frames. Certainly, the end of the week cluster is there, 134.95. So 135 is very much a target to the downside this week, with a few days to go. So anyway, back to our trading time frame. We still don't seem to have taken. Oh, there we are. We have taken a reverse. So there we go. Let's see. It's exactly what we were saying. We were into that 135.35 area. That's triggered some buying because it was a day low and profit taking on the move. So we were taking some offers. We got that, and if we had our stop loss down there, the whole position would have been closed. Okay, see how it's reversed quite aggressively. One candle, that's enough. Don't get too greedy. So we got in here and out because we pulled our stop loss down quite aggressively. because of the news announcement. Okay, if we've been trading this without the news announcement, we would wait for a touch. As I said earlier, we wait for a touch of the MACD in the signal line, or a flip of the parabolic SARs, or indeed, if some people put the stop loss at the parabolic SAR. It's a bit too conservative when you've got some major news like this. But again, you can see the significance of these previous levels and in the higher timeframes coming into play. So 34.50, sorry, 135.50. We're back to now, having tested into this low we'd identified earlier, 135.35, and we would take certainly half of it, some of our profit off there. I might have taken that all half, but certainly the rest of the position would have been closed there. So we'd here on this little simple 5 minute parabolic SAR MACD strategy, would have got in at 135.58. Our best move would have taken us down here to 135.35. In fact, it didn't get to 135.35, did it? 135.56. So we might have been caught there as that's turned quite quickly, but certainly would have taken some off there, and certainly the rest of it definitely. The minimum we would have made was there 135.50. So at least 8 pips on that one, and probably double that on this move down to the 135 zone. But it's still running down. Okay, if you haven't got your stop loss quite tight because of the news, you might still be in this, but that's still moving down to the to our benefit there. Using this trend, this is best as a trend following strategy, the parabolic SAR and the MACD system. But as you can see there, we might be able to tail it out, so we'd have missed this peak down here. But yeah, we got low, new low, new low, new low. So that's interesting, even on this 5 minute time frame. So new low for the day, 135.35.8 or 135.36. And that's been, we haven't got, as we just saw, we haven't got down to that level for a while. So the higher time frames are still very much to the downside. So the 15 minute big down candle ahead of the data, bounce back following the data as it's forming, but as you can see, it's still negative. The parabolic SAR is still negative. And but the MACD and the signal line sort of flatlining around zero, sort of flipping between the two. So it's not that much of a move there in the 15 minute. And when we go up to the hourly, that's been that was short from all the way up here. There we are, from the 27th yesterday morning, 10 o'clock. We got all of this move down, and then it flipped back. So you got in there. Do this on the hourly. You can see that a wee bit better. So you'd have got not there. You would have been filled possibly there. You probably left it for another hour there. 11 o'clock or 12 o'clock. You've got filled here, and it's just scrolled down. You move your stop loss down. You got, again, stop loss would have been there before it started turning around, but it was still moving lower. So I've left it there. It's retraced a bit there. Could have pulled the stop loss down to here once we'd bottomed out here. We were seeing at this point, we had quite a significant green candle, and that one there we flipped. We hadn't crossed, but that's enough to get us out. So we'd have been out at that point, having got in up here. So that was our out on this candle here, because we've the parabolic SAR's flipped, so we'd have got out. So we'd have got out there from yesterday at 12 o'clock. We'd have got out there on close, basically midnight last night, as obviously the market is corrected. So the hourly trade's been a nice trend down. So we would have got in at 137.6 and got out at 136.2. So near 100-point move, strong trend lower yesterday. As far as today is concerned, you see here on the hourly chart, not a lot's going on. It's flipping, isn't it? It's moved up a bit and it's flipped lower, but these haven't crossed. They're still touched. So we want to see the blue cross from above to below, the orange to start moving us down again, or the orange to move from below to above, the orange to start moving up. So but it's all around, because we've gone to this key support zone here at 135.50 there on that hourly time frame. So, upshot of it all is the dollar weakness continues. You look at the daily chart, it's sort of really against lots of pairs. It's fallen off a cliff over the last week or so. So from that 3 week rally we'd had at the end of March, end of December, beginning of January, we turned around last week and a big down day yesterday for the dollar. Emphasised later on in the day when Trump talked about not worried about the weakness of the dollar. It's good for our exports, but obviously he's trying to get all these companies to invest, manufacturers to invest in the United States. It's their returns are not good if the dollar's weakening when they repatriate their funds back to Europe or Latin America or Asia when they have to report. So it's a mixed bag. You want a stable dollar, really, don't you? But it's weakened very significantly. Obviously, it could turn around. He talked about yo-yo yesterday when he was asked, but it's been a very significant move for the dollar. Let's just have a look at some of the other dollar crosses while we're on, because I think the news flow. If I just go back to the 5 minute, the impact of what the Bank of Canada, what the Bank of Canada has said has had its impact. We were lower, and it's sort of retraced a bit, so a bit of weakness for the loonie. But interesting, that's now crossed to go. So I mean, be careful, not careful. Just be, if you're trading these short time frames, be careful. So we've got the cross there. That's flipped on that candle. So this strategy now is all of a sudden long on the 5 minute time frame. Whether we get back and above our entry level, time will tell. But that's having had a nice move down ahead of the data. That's now flipped along using this particular strategy. Hang on a minute. Let's wait till this candle's completed, because it looks like it's the parabolic SARS flipped, and we haven't got a clean cross there on there, so we have to wait a while on that one if that's going to continue. We want to see a clean cross like we've got here, which eventually, because it's the lagginess of it, it takes a few candles sometimes. And clean here, clean cross there. You see this is messy down here, not much going on with regard to the histogram. It's always a key sign. It also happened to be 10 o'clock this morning, so not ahead of the main date, so it was floppy before we had the 11 o'clock move up there. So just watching and waiting now on that one triggered, actually, because it's touched and gone away there yet. So you need a clarity of move. Okay, so we're sort of we're lower than we were. There's when the data came out, so hasn't moved things at all. Let's have a look if I've got any more news from the Bank of Canada. Some more headlines coming out around here. Yeah, so I don't think it's really changed anything. Market's pricing 8 points of hikes in 2026, ticked up 9 towards. So perhaps they will move in the opposite direction to the United States. They've updated some some economic outlooks. GDP for 2025 was 1.7 compared to 1.2. 2026 forecast is down from 1.6 to 1.1%. 27. So this is the time frame, this 3 year time frame. 1.5 from 1.6, and 2026 inflation, as they said in the statement, to 2% from 2.1%. So we'll see when that all pans out. The historic data has been revised. Some AI comments here. Economic growth in the United States continues to outpace expectations, and its projected remains solid, driven by AI related. Let's talk about the US. Tariffs are pushing up US inflation. Expected to degrade gradually this year. So there's still the concept. There's still the potential anticipation that US inflation is still getting, it's still yet to feed through, even though they've sort of been in place for 8 or 9 months now. Global recent weakness in the US dollar has pushed the Canadian dollar loonie over above 72 cents, roughly where it had been since October. Their October report. Inflation picked up 2.4% in December. We know this is all news. This is all already out. So it finishes. Monetary policies focused on keeping inflation close to 2% target, which is what they talked about again. While helping the economy through this period of structural adjustment, Governing Council judges the current policy rate remains appropriate. So it remains appropriate, that phrase still. Conditional on the economy evolving broadly in line with the outlook we published today. However, uncertainty is heightened and we are monitoring risk closely. If the outlook changes, we are prepared to respond. The bank is committed to ensuring that Canadians continue to have confidence in price stability through this period of global upheaval. Nudge, nudge, wink, wink to Washington. So inflation is their key target. And they're still talking about all of the central bankers' mantra of 2%, but 2.4%, as we say, was registered in December. So nothing really of market moving significance there. It's all outside of what the Central Bank of Canada remit is. But if the outlook changes, we are prepared to respond. And they have, they were first in the QT, first out of QE, QT, and they've shown their hand before. They are quite not afraid of surprising the market. But there we are. That long didn't pan out. We've had the flip of the parabolic saw, but we had that. We were playing with each other, but we were still short. So although we closed out because we pulled our stop loss down, we're now back in line with the trend. The big down, that quite a significant engulfing candle of this little move up we've had. But we haven't yet formed a new low. This 35.8, because the magnet that is 35.50 is key. So still moving down. So have a look at some of the other dollar crosses. I say euro went over 120 yesterday. Let's just take this up to an hourly time frame. So we went to 120 last night. We got as high as 120.80. Significantly over 120 yesterday, and we've cooled a bit. Obviously, a big old candle, lots of profit being taken off the tail. If we look at the daily time frame, monster candle yesterday. So profits being bagged by many automated systems, clearly at 120. Some pushed it higher, but you'd expect that to come back down. There's 118, which had been a previous sort of key resistance area, and then this other 1865 from September last year, and smashing through 119 and 120 yesterday as Trump continued to say it didn't matter about the weak dollar. So coming back a bit now, certainly for the euro. Dollar yen 153. There's Monday's gap down from Friday's big sell-off. We've got the election on the 8th. See how all that pans out. So 153 was the key sort of resistance area and support areas. We started to move up. So first test, first wave down, and then off we go, and then consolidation, then pushed higher. So we did get to 159.35 on an intraday basis on Friday. Looked like 160 was inevitable. Didn't happen. Whether we've actually had Bank of Japan intervention on that, it doesn't look like it, but there were phone calls certainly last week on Friday, and that's what caused the initial push. That there was both a coordinated potential move between the Fed and the Bank of Japan of the selling of dollars, hence the move down for dollar yen. And then obviously Trump's comments about the weak dollar perpetuate that move down. And then we've had a bounce back today. It's not really a strength of the dollar. Well, it's more to do with the weakness in the yen again, following the JGB successful auction yesterday. So a bit of a relief. But yields, I say 10-year yields, 4.25. First time it's 4.25.50. That's a high for a while, but certainly the dollar under the cosh. Cable, sterling pound against the US dollar 137.50. from the 138.70 high we got yesterday. So it's a bit of a, big old strong parabolic move. This daily strategy didn't actually trigger until here. I'm saying until because we've been in this sort of consolidation mode. The parabolic stars had flipped, but you'd have got a confirmation entry on an end of day basis here on the 23rd last week. Into close on Friday and up Monday, gapped obviously on Monday, blockbuster day yesterday. So obviously the question, will this gap be filled on all these gap marks? So watch those now, ladies and gentlemen. Gaps tend to get filled. The bodies of the candles, what we're looking for. Obviously we've got the intraday wicks, the gaps disappeared, but a big support there, 136.666 on cable on this chart, but that's still a bid to the upside sterling and the weaker dollar story. And the big move is the Aussie and the Swissy. Aussie 69.85. We did yesterday spike over 17. Let me put that on here because that's a really significant level for the Aussie dollar against the US dollar at 70. Just put it on my other chart. But, dot 70, and as we again, let's give you an example of how weak the dollar's got very quickly. I mean, huge parabolic moves again. You see the bigger gap there on the Aussie from from Friday's close to Monday's open up here. So that looks like that maybe getting taken out. Is this the end of that leg? It's been a massive move, so let's see where that might retrace to. If we lose steam at 17, there's a reason. If we go up at the time frames, technically, that high from September. Remember, we went through that. We talked about that earlier in the week. The 24th of September high, and there we are. So this was this is weekly. This takes us back to January 2023, where we are now. So some 2-year high. So last time, we burst through it and went up. Burst through it, came back down. Burst through it and came back down straight away. So there may be some sort of retracement to move down. And certainly, if you look at the 4-hour time frame, there's certainly been profit take, but we're still constantly, we're still relatively strong, still holding at highs. But if you do a little fib there on that, I'm just using the Aussie as an example, but a little fib higher, we've gone back through it there in the 4-hour time frame from our beating of the 70 level. The 50 level sits at 69.67, and then the key fib the key golden ratio sits at 69.50. So 69.50. If this is going to go higher into the spring, Aussie, that's a key support area now. And as you can see here, I don't really use this fib level personally, but the 68.6 is a resistance area just from this last week's last leg higher. So this is still positive on this strategy. But look here, see on the 4-hour, we've had a touch here on the MACD and the signal line, but way north the MACD signal line, and not a big movement in the histograms. So positive, massive move for the Aussie as the dollars continued to weaken. We've got another step up the daily time frame. That's that's the extension down, isn't it? It was just on yesterday, that leg. Yeah. So obviously that's our leg yesterday. So from the UK book. So the extended on the daily time frame. This move we've had this week, this gap up, the gap, looks like it'd be closed, and the extended 1.61 big takes us back to 68.40. So there's a big the gap over the weekend to be watched. Is it a breakaway, or is it going to come back and retrace that monster move yesterday, and obviously some profit taking today for the Aussie dollar? A similar move on the dollar Swiss. Obviously, it's just inverted, but a bigger move back today for the dollar against the Swiss franc. Although we did actually move low again here on the daily time frame, nothing's changed. Big gap over the weekend. Move down Monday. Sorry, move up on Monday. Big move down yesterday. And today we've been as low as 75.83. 75.83. That's an area we talked about. If I flip back to my other chart, I don't want to make a copy. Sorry, layout. Our Bollinger Band stochastic chart here for the Swissy. These are areas we've talked about many times, haven't we? This downside, 76 listed. So there's that range we were talking about for half of the summer, all of the autumn. Just didn't, and big break there on that 20th of January. It hasn't looked back since. Big gap down on Monday's open, and then exaggerated move again yesterday on the back of Trump's comments. And bouncing back to there, but obviously technically we look at where we closed to, where we got to, where was tested, where was rejected, and it's gone through 7.76 now. The Swiss franc, always in demand in volatile times and confusing times, uncertain times, and nothing's changed in this first month of 2026 with all sorts of political shenanigans going on. So dollar under pressure. I think we've seen the move of the CAD. I think that's reasserted itself. Just go back to our 5-minute time frame. So there we go. We've reversed. So we pulled up here. Might be some comments at 3 o'clock. What's that? So back through 330, 35.65, and that 35, 135.35 area that we caught after the sell-off after the announcement has been retaken, and 135.50 has been taken, and that area we had here on this chart, 135.65, has also been taken back out. We're back to 135.80. So unless somebody's said something, there's been some announcement. There's nothing to go on there. Our press conference is still 15 minutes away, so there's nothing in that. Let's just have a quick check. There's been a change. Source released opening statement takes 45 minutes earlier. Source released opening statement text 45 minutes earlier than should. Right, okay. So apparently the statement was released 45 minutes ahead of the actual announcement. So that might have been why we've moved low. But anyway, obviously, all of this is also in anticipation of the Fed later today as well. But anyway, the upshot is that dollar CAD remains very much very much on the downside. Some things happened in the last 5 minutes to cause a bit of a dollar buy, and again, it might be some institutional buying at that 35.50 and the 35.65 level as that's something quite a strong hourly candle, but there again, proving it this level here, the 35. Just maybe just put that level in, move it down to where the other one was, 35.50. Is where the buy-ins come in today. So interesting, testing the hourly 20 period there on dollar CAD. So elsewhere, I say gold. I'm sure you're all aware. Gold has hit new all-time highs today, this morning. 5,300 has been breached. 5,313 we got to as the European markets were open and London bullion markets were getting into full swing, and we're still holding at 35,250 at the moment. So as I keep saying, what seems like weeks now, be careful trying to short this gold market. There are structural changes going on and continuing to buy. The de-dollarization story will certainly gain more traction now. The Chinese and other central banks continue to hoard the bullion as well. Gold miners well benefited as well in the stock market. So gold continues to ramp, and silver is even more parabolic, isn't it? Madness in the silver market, many are calling it. If we look at the daily time frame, absolutely parabolic. But remain on a soul, bit of a sell off, but off we go. And Monday we got to that incredible 117.50, 117.10 it was, wasn't it? For the silver market. But looked like that wasn't getting. That might have been the top as we've gone over 100. Didn't happen. Stronger follow through yesterday, and we're up again today. So all time highs, closing highs yesterday, and are we going to take out that intraday spike on Monday this week, or is profits getting bagged? We need to look at the the trend is just continuing to push higher. Be very careful trying to fight it or catch the top on that one. Crypto had bounced back earlier when I was looking. Bitcoin was eyeing 90,000. It's failed so far today in its first attempt at 90,000. So we were up earlier and we've come down the last couple of hours. So we get through 90,000. We actually did perk through 90,000 over lunchtime, my time. And then again, that's triggered some selling at 90,000. We trade at 89,250. Some intraday moves there, but again, it's looking still holding its own as it's ticking up, but nothing to get too excited about yet. We're still stuck in this channel. The burst up, I keep saying this every day. He has failed. It doesn't want to go lower. Didn't want to get to 85,000 on Monday or the weekend, and so far this week it's actually been to the upside. So 90,000. But as I said many times, 92,000 is my key to the upside. But we remain channel bound on Bitcoin. Nothing's changed with regard to upside or downside support. WTI closer to 63 than 62 now, so that's a key move we had yesterday. Big strong move through 62, and we've been higher today as well, over 63. And we're still holding, just under 63 at the moment. So what looked like a muted move higher as brokers has followed through from Friday's move higher as well. Obviously, the ratcheting up and yesterday's comments about the fifth strike fleet in the Gulf. Obviously, whether we go and follow the Venezuelan playbook, if you like, taking out leaders. I can't see them. The risk in that. The risk is much bigger in Iran than it is in Venezuela. Much more protected, devout supporters. But obviously, they've changed their beliefs, and the pressure ramps up. Obviously, they had key insiders in Venezuela. Whether that's the case in Iran, we don't know. But they could just start an economic stranglehold, a bit like they'd started with Venezuela during December, taking out those tankers and the fishing guys in the fishing boats. So yeah, just to keep the momentum going, keep attention away from politics at home. But has he had enough of these strikes? I don't think so. Do you, old Mr. Trump? He loves it. So Iranians apparently, Iranian regime. Anyway, desperate to try and speak. I was reading yesterday, 95% of Iranian exports are all going to China. 95%. Obviously, sanctions really, really biting. So pressure on China if those oil exports start to dry up because of blockade by the US Fifth Fleet. But we'll see how it all plays out and how the Iranians will react. How can they react? What's left of their traditional missile fleet after the bombardment by the US and the Israelis? And then obviously the nuclear question remains a very high topic. But anyway, all of that is seeing a bid for the oil price. Brent at 67.60 and WTI here at $63. So we've been bid over the last week or so, and Friday's big close has been followed through. Obviously, the big storm in northeast United States has helped the petrol price and the heating oil price as well. That's all lifting the demand for crude as well over the last couple of days as well. So again, let's see if we can hold these moves higher. Technically, again, if that leg is if that was the last leg down, let's have a quick just that. If that was a clear top and bottom, isn't it? We got there from our fifth level. That's where we got to now. You know, it's by magic again, isn't it? Let me see. Well, Fibonacci. Well, there we are. 63.50. I think we said this before. I mean, is the 1.6 extension level of the array of this last significant leg down. This leg up and then down wasn't enough. Again, if we do like another little fib of that intraday move, if you're looking to the volatility of that, there's this break out the next level up. So we're at that one at 63. In fact, 63.40 isn't it? 63.50. 63.50 is that one. That minor 3-day move lower. The extension of that move takes us to 64.50 on these fib levels. So if that continues to the upside, obviously some significant geopolitical news will have a follow through impact on the oil market as well. But can it sustain this rise? Bit of a question mark over that. But at the moment, it's last 2 weeks, it's proving good to go as well to the upside. Indices, we had closing all-time highs yesterday on the S&P 500. We were up 24 points, 96978, and I say during the day today we've gone over 7,000. There's our whoops, the daisy. Remember that? We've gone up 7,000 earlier this morning, our derivative market. So in intraday highs through 7,000. Again, big old update on Monday, followed through yesterday, and we're up so far today. We have actually got some live skin in the game on my trading platform here. We got in here on Monday. Our stop loss is now here. No, 4-hour time makes it easier. So we were filled here on Monday. Our stop loss is quite tight here, but we've rolled over this morning from that breach of 7,000 so far. As I say, all eyes on after the hours when Microsoft, Meta, Tesla, IBM report today as well. The Dow less so. It got hit significantly yesterday by the healthcare insurers. So I had quite a significant whack compared to the other two. So we followed through on Monday's bounce, but then yesterday we came down. The Dow was down. The cash market today closed down 0.83 of 1%. I say it was the health insurers, healthcare, and Nasdaq was up nearly 1%, 0.9 of 1%. We're also got skin in the game on the Nasdaq. On that one, that looks like it's hit the stop loss. I don't know because that's the daily. If you go to the hourly time frame, you see stop losses there. We got in here, so we trapped in some 200 points on that, but we're still very much out the money for this week as well as last week. And therefore, for January, it's looking like a losing January, first losing month for a long time. When that is, but it's not over yet. But it's looking that way. So our stop loss is at 25,996 here on the Nasdaq 100. We got filled at 25,708 on Monday's around about Monday's close. Well, not close; it was ahead of the close, but some got filled. I can share it on Discord at the time. So that's in the money. And the other two indices that we had trades on were both closed. The FTSE hit first to its quite tight stop loss this morning as well. We were in the money for a while, but that was 30 points off. And the Nikkei, we lost another 200 odd points. And the Nikkei, no, it was 500 on Tuesday, wasn't it? And we re-entered again yesterday on the Nikkei. Again, our stop loss is here at 52,772, and our entry was at 53,645 yesterday. So that's still live and open. It looks like that was coming down and out as well. But you see the hourly 20-hour has held that decline so far. So yeah, open trades at the moment. Say the Nikkei, the Nasdaq, and the S&P 500. I don't. We closed. Or Aussie dollar was still open last time I looked. The other one from last night, the Kiwi Swissy, we closed. Let's have a look at where we are now. The hours up in a minute. So if I put in a New Zealand dollar, we are Aussie New Zealand. Yeah, it has come back to stop loss. Not before I correct. So that hit target one, Aussie New Zealand this morning. Stop loss pulled up, and that second half is closed there. So we've got a little second half of the trade has been closed out for a little game. We got in at 115.87, and we got taken out at 115.98. So another 12 points, or 6 points. In fact, there's only half a position on the Aussie Kiwi. That's completely closed. And I closed the Kiwi franc. Kiwi franc? It's Kiwi franc, Swiss franc. It was from last night, was it? Yeah, Kiwi franc. I closed that this morning, didn't I? I think. Yeah, that's just continued. Kiwis continued to respond to the upside. We got them right at the bottom there. There you go. That's trading for you, my friends. Catching right at the bottom. We go short right at the bottom of the market, and off it goes in the opposite direction. Stop loss was up here originally, but I pulled that down this morning. I got out of that 7 or 8 o'clock this morning, I think it was, when we got taken. Phil closed that one, and that was a 10 pip loss on the Kiwi Swiss. So there we go. I'll be back later for the Fed announcement, 7 o'clock my time, 1900 hours. I'll be here at 6:45 later. I'm going to go and have a cup of coffee because I'm going to lose my voice. See how the markets are moving. I'm going to leave you with our live trades. That's the Nasdaq. We were long, and our stop loss is way above our entry, so we've got guaranteed pips points on that one. Interesting. Stop loss is just above the gap. We should be below that gap, but anyway, short-term trade. So there we go. See you later. Be good. See you all for the Fed. If you not make it with the Fed, watch the recording later. But in a recap, no, absolutely as expected, really, from the Central Bank of Canada. Nothing changed. The statement hasn't changed. They've kept rates at 2.25%. Talked about increased potential volatility because of the uncertainty in the world in reference to the geopolitics that's going on, and the firmness in inflation in December, but still confident they can get to their 2% target level during 2026. We shall see, and markets are still expecting a potential hike from the Bank of Canada around the cut. So we shall see. Okay, take care, everyone. I'll see you later. Be good for the rest of the day, and I'll see you for the Fed tonight.